Here we are at Solana Breakout. I'm MartyParty. We've got Matt Hougan in the house of Bitwise. Talk to us about Bitwise, what they're doing, the context of Solana, ETFs, Clarity Act, regulatory concerns, and the general downturn in crypto. And Matt, welcome.
I'm so excited to be here. Thanks for having me.
Just from today's experience, talking to several guests, let's try and keep us upbeat. We know that there's a downturn, but we know that that's to be expected. And it's not just in crypto. I want to be very clear that we have tracked this, and this is across all software, literally to the dollar. We're having the same downturn as Microsoft had. We're having the same downturn as Palantir had. It's the way it works. This is all results of the government shutdown back in October and the draining of the general account. And here we are. We're waiting for new liquidity. I think it's coming soon. It's a pleasure to have you again. CEO of Bitwise, Matt Hougan. It's been a while. When was it? About 3 months ago? 4 months we spoke.
Yeah, that sounds about right. It's good to get back together again. And I've got plenty of high energy. I'm feeling bullish.
There
so
we go. Me too. I've been waiting patiently for this. I knew it was coming. And I'm always very happy when it's fast.
I agree with that.
This could have taken 6 months to get down here.
It's like ripping the Band-Aid. You finally feel that it's off,
Absolutely.
ready to build,
Absolutely.
and off we go.
So just from a personal perspective, outside of Bitwise, do you have a long-term investment approach to crypto? Do you have any sort of a timeline, or what is your thoughts? Do you believe in the 2032 return to the bull market from that old era times to get rich chart? What's it called? The Benner chart, right? Do you believe in that stuff? The 100-year cycle? Are you a believer?
Interesting question. I'm a huge believer in crypto long term. I think we have a generational trend, and it's going to be a 40-year bull market with pullbacks. Tell me more about the 100-year chart. I want to know more.
Oh, okay. This is a famous chart. I've posted it several times. Usually I post it in these times when we pull back, but it's called the Benner chart. Let me bring it up. Basically, I'll give you the exact Benner chart. Here we go. You can just literally go on your browser and type Benner chart, B-E-N-N-E-R chart. It's a famous chart called Periods When to Make Money. It goes back to 1924, which ironically is the 100-year cycle. So, that is the anniversary of the 100-year cycle, which was 1 year before, the beginning of the opening up of the stock market to the public, and derivatives, which led to the 1929 crash, which led to the Great Depression, which led to the First World War, which led to the Second World War, the creation of the Fed, the creation of the SEC, and obviously to Bretton Woods, the creation of fiat money, the divorce from gold, which typically is an 80-year cycle. And here we are, literally 100 years to the day. We're visiting it again. And the Benner period basically shows you the periods when to make money. So when you should buy, when you could sell in the sort of mid-years, and then the ultimate times to sell on the top. And the 1924 was the buy, which is interesting because 1927 was the sell right before the crash. Right?
Yep.
Which lines up perfectly with now, right? 2024 to 2027 would be the prediction. But Benner actually has it as almost perfectly for the COVID years. He had it as 2012 to buy, 2019 to exit. Then the next buy is 2032 with a sell of 2035, followed by a buy of 2050 and a sell of 2053. So it's a really interesting correlation to the cycles. This is obviously supporting the 100-year cycle. And it's kind of really been accurate. I spent hours grokking each of these things to see how relevant it was. Anyway, write that down and have a look at it.
I got it up on my screen right now. It's totally fascinating. I believe in the general idea. I do think this is a boom phase, but I'm going to spend some time with this chart tonight as well. I like it. Thanks for calling it out.
So those not familiar with Mr. Hougan, Matt, we go back a while. He is the CIO at Bitwise. Is that still the case? So you're now chairman of the board?
Nope, still CIO, still in the trenches. Yeah.
There you go. Maybe you want to give us a short background, as usual, just the highlights of your career and what you've been doing. where you are now, and then we'll run into some questions.
CIO here at Bitwise. We're a global crypto asset manager. We manage about 15 billion across US, European ETPs. We have a staking business. We just launched a vaults business. And we have the largest, I believe, the largest Solana ETF, certainly in the US, BSOL. I've been at Bitwise for 8 years. Before that, I was in ETFs. So I was the CEO of ETF.com, created the first ETF data analytics and rating system, and then sold that business and pivoted to crypto. Let's see. I don't know. I started my career as a minor league baseball mascot, if you want to go all the way back.
You were the mascot? I thought you were going to say.
I'll share a picture later. But yeah, there's a fun fact about it. I was a mascot of a minor league baseball team.
Oh, you see, people just keep working.
You can start anywhere. But no, mostly crypto and ETFs. I wrote the CFA Institute's Guide to Crypto. I wrote their guide to ETFs. And I have the privilege of talking to thousands of institutional investors a year about crypto. So that's my unique lens. That's what I can bring to the table.
Can you tell us, before you even continue, over your years of elevator pitching crypto to institutional investors, has it improved lately, or has this downturn correlated with sentiment in the pitch?
So no, it's improved dramatically, and there is no bear market in institutional crypto, B. So let me touch on both of those really quickly. Yes. In the early days, 2017, 2018, we would literally go into institutions and we would like take the Wi-Fi card and the speakers out of a computer and show them how to create an air-gapped computer. That was the level of explaining crypto that we were at. Today, those questions, you don't have to cover those anymore. People want to know about use cases. They want to know about transaction size and transaction activity on things like Solana. They want to talk about stablecoins and tokenization, and they want to talk about role in the portfolio. So it used to take us years to get through the very basics, and now we start essentially at third base, and you just have to get them home. So it's helped. And then on the no bear market in institutional crypto, that's really true. I understand and know and feel from talking to people and being on crypto Twitter that retail sentiment is terrible. The fear and greed index hit 5, maybe it's at 10 now. But when I go out in the field, I was in Miami last week meeting with multi-billion-dollar advisors. There were two forms. One, people who had allocated in 2025, and they were all holding. They weren't buying more yet, but they were holding. And two, the people who hadn't allocated, who they all wanted to buy because they saw this as an opportunity. Institutions aren't surprised crypto is volatile. So they aren't surprised that it pulled back. I think they're going to continue to buy through this pullback and be part of what leads us out of it into the next bull market.
Absolutely. If we could just dig a little deeper there. When you talk to institutional investors now, what are they gravitating towards? What do they see crypto filling in? What do they see the use case it's supporting? Is it aligned with the retail thinking, or are they relying more to the store of value, the hedge against sovereign uncertainty, the payment rails, the efficiencies, agentic finance and AI needing crypto? What narratives are they starting to invest in?
Yeah, there used to be only one, which was coin as digital gold. And that is still important to them. I do think people around the world are waking up to the worry that fiat currency may be, to use sort of Ray Dalio's term, in its last phase. And so the store value thesis still really resonates. But the other one that really resonates is anything related to tokenization and stablecoins. The assumption from the institutional community is actually more bullish than the retail community. They assume that it's fait accompli, that everything's going to be tokenized and that stablecoins will sort of sweep the world. And so they want exposure to anything related to those two themes. They haven't yet gotten excited about agentic finance, even though I'm excited about that. They're really focused on store value and stablecoin and tokenization related plays, which they see as sort of this unstoppable force in the market that they need to have exposure to.
And are they starting to resonate with the notion that the technology and the software and its cycle is completely sort of disconnected to the dollar pricing and the markets?
In terms of its adoption? Yeah, absolutely. I mean, again, they understand that the market is volatile and they're not surprised by the pullback. And they can look at the same charts that we all look at and see that there's historically been this 4-year cycle, like it or not. It's repeated for good reasons or bad, but it's there. And they're already starting to look ahead to the end of that 4-year cycle and position. And they know that the underlying fundamentals are there. I tell them all the time that this is one of the few moments in crypto where the fundamentals are ahead of the price. Usually the price is ahead of the fundamentals. And we're in the reverse case of that right now. And that's appealing to people.
So before we get into the nitty-gritty of the typical boilerplate, do you think that it's no coincidence that we're literally to the dollar, the price of Bitcoin on the Trump election day?
Look, once we started pulling back, it felt inevitable that we were going to cover that gap.
I agree.
It is just a giant gravity magnet. Of course, we were going to retrace. It was painful to say that when we were at, 82K, but it was looming out there like a big magnet. So, yeah, no, I don't think it's a coincidence.
I mean, I always just tell people, Matt, I always say, look, you know my theory and my theses. We've been very vocal about that. But you remember the bullish energy leading up to that?
Yeah.
And the insane bullish dog and pony show right after that, which powered us up to the hundreds. Can you imagine the amounts of people that went long?
Yeah.
And how much liquidity is sitting below that inauguration price? I think that is ultimately that's the strategy at play right now. We know that they ran at the giant trend research Ethereum long, 1.25 billion at 1835. That happened already. And I suspect they're now waiting for the moment to take the Trump inauguration longs. And it's all about what number is that? Is the narrative out there to retail to know that, not to capitulate? But from your perspective, from an institution perspective, what is the narrative right now with regards the depth this may go? Are there numbers thrown around? Do people correlate it to the PMI, to global liquidity? You mentioned the 4-year cycle narrative might be a little more as entrenched as we think. What factors? I heard you on CNBC, so I'm kind of leading this in.
Look, I mean, there are many factors that have contributed to the pullback. The questions I've been getting are how long and how deep will it go? And the two answers that people sort of reach for are, well, maybe it could be as bad as the last cycle. I don't think that's true. I think it's a more mature market. But in that case, the last cycle was what, minus 75? We're minus 50 on Bitcoin. So there's still room to go. More and more people, however, talk about duration. I've seen a lot of talk about previous bear market cycles being 12 months and 13 months. My view is that this bear market started for retail crypto in January of 2025. So we're actually pretty deep into it. And we just didn't notice it because of the institutional flows into Bitcoin. But outside of Bitcoin, look at the price, went straight down from January. That's what I hear a lot of people wondering is, when did the winter start? What does that mean for when it's over? And will it be as deep as it was last time? My view is we're pretty late into the winter. We already have max pain from a fear and greed perspective. And I don't think it will be as deep as it was in winters past. But those are the kind of questions that we're getting.
I've got another little thing you may want to find useful. I'm a big believer that there was a strategy change around the beginning of 2023, right at the depths of that bear market, which people attribute to FTX blowing up, etc. But if you go correlate it to software stock, they did the exact same bear market. So it was just a general software bear market. But if you get a 50% measurement on TradingView on a weekly or daily, from January 2023 to the all-time high at 126, guess what number you come up with?
I don't know. Tell me.
68,617. What's the price right now? So you see that there are a lot of technical. I'm a big believer in the 50% pullback. I believe that's how market makers play this game. They invest X and they take out half X and continue doing that. In my opinion, there is a probability higher than a non-zero probability this might be the bottom, correlating it with the Trump inauguration price being exactly here as well. In my understanding of leverage trading, they're probably going to run at the 25Xs, maybe as low as the 10Xs from here. So to clear it out in some kind of a V-shaped recovery, which in my opinion is probably going to go potentially as low as 58.
Yeah, I think that's completely reasonable. And that would be consistent with classical behavioral dynamics as well. So that, that makes sense to me. What we've been talking to people about is like, look, it's very hard for me to pick the exact bottom. But what I can tell you is that 5 years from now, when stablecoins are a $3 trillion market and tokenization is multiple trillions, and there are a billion agents using DeFi, that the prices now will look silly. And so what that means to me is some version of dollar cost averaging, if you're a long-term investor, is a reasonable approach for a lot of people. Not for everyone, but for a lot of people.
I mean, look, it's all about at this point technology conviction. Do you believe there will be expansion in technology? And I mean, at this point, if you had to put a probability on it with the AI narratives and Elon Musk pretty much controlling that narrative and just innovating insanely, trillions of dollars in technology investment into the US, the president being pro-technology, pro-industrialization, one has to be an idiot not to think that at some point there's going to be a macro technology explosion.
Yes, I often tell people to like write the story backwards. Fast forward 5 years from now and look back. What are some of the most obvious things you can imagine from that 5 year forward vantage point? And it's what you're saying. It's a massive technology explosion. It's huge growth in agentic finance. It's every asset being tokenized, which Paul Atkins and Larry Fink are both telling you will happen. I think during these bear markets, your focus narrows and you can't see that many years ahead. But it's a nice narrative exercise to like port yourself forward 5 years and look back at what was obvious. I think a lot of these things will look obvious then.
And also, actually, if you're a chart watcher daily, like I unfortunately am, you're in the weeds thinking, "Oh my God, what's going on?" But actually, if you look at it, we're not that low.
I agree.
We're actually not low at all. We're substantially higher than I would have expected given living through 2017, 2019, 2020, when there's full capitulation. Given that, let's pigtail into another conversation I'd like to have with you. I mentioned to you before this, I posed you this question. What is the price of Bitcoin and how do we derive the price of Bitcoin?
Long term?
No, on a day-to-day basis. Given the
Well,
fact that we have 600 exchanges in 127 jurisdictions trading the same commodity with no regulation.
yeah, it's a real challenge. Yeah, the price is not uniform across the world for sure.
Do you ever have institutions ask you that question?
We spent a long time early in the development of Bitcoin ETFs designing pricing methodologies that tried to average and remove extreme outliers from various points. But you raise a great question. We used to get a lot of questions about that. We get fewer now. I think a lot of people just look at IBIT, but for sure, it's a good question.
So when you say most people look at IBIT, they sort of look at the price of IBIT shares to reverse engineer the price of Bitcoin.
Yeah, I think a lot of people in my world, in the traditional finance world,
Is insane.
definitely.
I mean, raise your hand. Anyone in the space has ever heard that? No, I love that. I started switching to gold, Bitcoin gold.
I love that.
Yeah, I think what we're indicating to you, the audience, is you need to understand that there are several ways to value these assets, not just dollars. And I think there is an absolute fixation to valuing things in dollars, when the dollar is probably the most manipulated of all base currencies. So, pick something else. Look at, I mean, at least it's a regulated stock.
I couldn't agree more. And, and actually, that's something we talk to investors all the time about. They're 100% exposed to dollars, right? Most of their portfolio is entirely dollars. And there is a whole different world out there.
Absolutely. Let's quickly talk about the last couple of months and what we've seen. What are your thoughts around the surge in gold and silver? Do you feel like there was a sort of sovereign repricing to 5,000 on gold? Do you think that it was an unshackling of the shorting? Do you think it was genuine buying on exchange, physical gold by China? What's your thoughts?
Yeah, look, I think it started as a self-sovereignty trade by central banks way back in 2022. And if you look at even the reported data, which is underreported because China doesn't contribute, but even the reported data shows that central bank purchases went up 150% in 2022 when the US seized Ukraine's treasury assets. And then they've been elevated ever since. And when you layer on China on top of that, I think that's a major driver. And eventually supply just dried up and you started to get the parabolic price. I do think at the very tail end of gold's move, it became a momentum trade. and people layered on top of that. So I think of it as a fundamentally driven trade driven by central banks' desire for self-sovereign money with a momentum trade layered on top. But I think that momentum sort of left for a minute. And, if you pan out and look at like a 1 year chart, the move doesn't look crazy. It looks pretty contained. It only got crazy for a couple weeks when it spurted up to 55. I think that momentum more or less got squeezed out. So mostly I think it's fundamental buying by central banks.
And do you think that the effects of this gold and silver move on inflation are lagging and we'll see it coming in the forthcoming months and years, given that every electronic device has gold and silver in it? Or do you think that it was priced in? Or do you think it doesn't actually affect inflation as much as we think?
Well, I think silver will have a real effect on inflation. I think gold will mostly wash out. A lot of the jewelry demand for gold is actually just demand for physical gold and the monetary purchases of that. But on silver, I think it will have a trickle through inflationary effect. More big picture, I think it speaks to the fact that the fiat era is coming to somewhat of an end, at least a different form. Most of us have only lived in an era
That's
dominated by
exactly it.
fiat, but that's a blip in history, right? That was 1971 till today or till last year when central banks started having more gold than fiat. It could be that we were living in the anomaly and we're coming back to the norm, which is, a dominant global hard money regime. I think that's where we're going. So I think it does speak to the long-term weakness in fiat.
I mean, I was born in 1970, so I've literally lived through the entire fiat experiment.
Yeah, and nothing else. That's all we know,
Nothing
right?
else, nothing else. So, is your feeling right now, before we get into Solana, is your feeling that if you don't own assets right now, you're in trouble?
Yes. Yeah. Yes. I definitely think so.
And do you think that crypto is an opportunity for the regular person to acquire assets?
I think it's a massive opportunity. I think it's an asymmetric opportunity. It's, all the alpha in the world is sort of behavioral alpha. And there's a huge amount of behavioral alpha in crypto because people won't evaluate it rationally. There's so much emotion attached to it. And I think it's dramatically underappreciated by the world. So, yeah, I think it's still the fastest horse in the race. It's still the asset that you, I think, need to own going forward, at least to a degree.
Absolutely. Okay, so let's jump into the next round of questions. We've done 25 minutes of sort of macro,
Yeah.
which is great. I can keep going hours with you. Let's talk a little bit about stablecoin for a second. Clearly, stablecoin has become the unicorn use case that the government, through, I believe, education, has realized is their way of reaching absolute efficiencies, benefits them the most, is a solution to their problems, and could resurge the dollar as the reserve currency again, whilst creating self-auditing. It's sort of a outsourced CBDC. Would you agree?
Absolutely. Yeah, I think it's now seen as our last best hope for extending dollar dominance into the world. It's sort of like a gift from the tech gods that's given the US its last chance at this. And the US is determined to make use of it. I was in Davos a few weeks ago, met with a bunch of European bankers, and they're terrified of crypto dollarization through stable coins. And they're working to sort of jumpstart the euro stablecoin market. So, yeah, I think it's absolutely a killer use case. Think here in the US, it has strong bipartisan support. And I don't think we've even seen the beginnings of the boom in stablecoins, is my guess.
So just a quick blast. Give us your Matt Hougan impression. Why are banks so afraid of stablecoin?
Well, because their business model is fundamentally flawed, is the answer. The reason most people bank is they need somewhere to put their money and pay bills. It's not to give money to a fractionalized reserve system that then lends it out. It's a stable deposit base. The challenge of stablecoins is it's easy to see how widespread stablecoins would displace traditional banking accounts and displace payments and sort of crimp the bank's core operating model. Regulatorily, from the US perspective, they need a significant deposit base in order to operate because of the post GFC reserve requirements. And if stablecoins challenge that even a little, it puts the bank at risk. So the core answer is their business model is bad, and stablecoins expose that. And they've been fighting this for a while, right?
Huh.
Before they were fighting stablecoins, they were fighting narrow banks which were just trying to do effectively what stablecoins did. And the dam is finally breaking, and they're afraid.
So do you believe that the banks were behind the choke point initiatives?
I think there's truth to that for sure. I don't think it was exclusively the banks. I think there was negative animus in parts of the Biden administration towards all things crypto. So it was also political, but yeah, I think there's a protectionary element from the banks as well.
So let's move from banking and their vulnerabilities to tokenization. Is it Bitwise's belief that, like Larry Fink says, everything will be tokenized?
Yes.
Okay.
Yes.
And from an investment perspective, do you agree that the valuation of current blockchain networks is purely speculative based on some fun and games, but turning this corner to tokenization of dollars, equities, debt, real world assets will return to fundamental valuations? If so, have you guys started working on models? And if your models of valuation are in place, do you see the value of assets tokenized on a chain and the transactional volume transacted in tokenized assets being responsible for their valuation?
A lot to unpack there. Let me try to hit a few of those pieces. One, I think tokenization is much bigger than people think in a couple different ways. For one, the numbers are just huge, right? There are $110 trillion of stocks, $150 trillion of bonds, $250 trillion of real estate. Those numbers are enormous. There's $20 billion of real world assets on chain right now. So we're talking about, 10,000x style growth. And I think very few people are thinking about what that means for the DeFi ecosystem, what that means for the volume of transactions, et cetera. They're sort of doing first order thinking on tokenization and not thinking about what it means for the ecosystem. So I think it's a bigger boom than most people think. On the valuation side, my view is that most of these blockchains are still like Series A startups. And it's silly to think of something like Solana even at, 50, $60 billion as a Series A startup. But the reason I think that is because the market they are going after is so incredibly large. We're used to startups going after markets like social media, and blockchains are going after markets like money and finance, which are really, really big markets. What that means is that revenue is important as an indicator of real economic value, and blockchain GDP is important as an indicator of success. But actually, what you want to see is the same thing you want to see in early stage startups, which is an acceleration of those indicators. So it's actually better to have a smaller number growing faster than it is to have a larger number growing slower. I think valuations probably reflect that. The reason people have a hard time linking revenue to valuation is because a startup with relatively large revenue that's growing slowly will be valued very cheap, and a startup with relatively small revenue that's growing quickly will be valued higher. And I think if you do that kind of analysis, you start to see some trend in the data that is worth studying.
That's a brilliant answer. Okay, next one. Just by the way, these are my questions straight off the top of my head. These are not prepared. I consider you a buddy, so we're just chatting. If that's the case, and let's say you just rattled off some numbers, it sounded like you're talking about at least $500 trillion of value. If that's the case, and these are proof of stake networks, in other words, whoever owns the majority of the stake has the majority of the voting power. In other words, the network security is directly related to the stake.
Yep.
And if that's the case, then acquisition of the stake becomes highly important, right?
Hugely.
Right. So if the US and Europe and institutions and real estate firms are tokenizing their valuable assets legally on chain, then the value of that stake to secure that should appreciate, shouldn't it?
Definitely. Yes, absolutely will.
So when people say to me all day, every day, Marty, why do I care if Circle issued 500 million USDC on Solana? It's 1-to-1. I can't invest in that. And I say, no, you need to invest in the stake that secures that.
Yeah. Yeah.
Does that resonate with you?
Of course it resonates with
Can you
me.
talk
Yeah,
about
that's
that a
that.
little bit? Go ahead.
Yeah. No, that's what I was talking about sort of blockchain GDP. And there's been some great work by other researchers. It's not my idea, but yeah, absolutely. As the economic value secured by the network increases, of course, the contributors to that value will reap the reward of providing that security. And that is what's staking. It's baffling to me that people get tangled up in those arguments because it seems obvious to me. But what you're saying is exactly right. Of course, if there is $100 trillion secured on a network, that network is going to be valuable, and the people who secure that value are
Well,
going to be
well, I think
compensated for it.
you always go back to misinformation and miseducation. I don't know if you know her.
Yeah, for sure.
Early on, she's no longer with the digital chamber. She's on her own, but I think a visionary in the space of crypto
Yep.
lobbying. And she said she was the person that initially, years ago, told me, no, the whole notion of stablecoin is an outsourced CBDC. But she told me very clearly that, at the end of the day, if the government is issuing US Treasury bills and seeing stablecoins as a buyer of last resort, and then tokenizing them through issuers so as not to do it themselves, which they could between you and me. Scott Bessien could literally print treasury bills, issue tokens on Solana, Ethereum, and bypass Circle entirely. But that wouldn't make sense because they need to separate through the
Right.
sector, right? So they created this notion of an issuer. But if that's the case, then shouldn't they need some form of stake, because now their US Treasury debt is on chain, available to anyone in the world that can get more stake than them? So do you believe that's this whole premeditated move to create this concept of a crypto stockpile?
Oh, that's an interesting question. I hadn't thought that process through.
Maybe
I think
that's what it is.
it could be. Yeah. I think it's definitely part of the desire to have America be the center of the crypto world, right? That's an explicit push that understands that we've benefited tremendously from being the center of the financial world for the last at least 50, 60 years. And we want to be the center for the next 50 or 60 years. I don't know if the crypto stockpile is a happy accident or tied into what you suggested, but it's a great idea. I like it.
Well, I mean, let's just say there's $1 trillion tokenized on Ethereum and Solana in stablecoin, and some other adversary manages to suppress the price sufficiently to accumulate 51% of Ethereum. They would control $1 trillion.
I agree. It will be in our interest for it to be widely diversified
Correct.
and certainly to have some stake, to use the word that's just right there
I
for
almost
us
feel like
in the
national
network.
security almost at this point.
Yeah, of course. If you take it out of crypto and imagine it with exchanges today, yeah, it becomes obvious.
Okay.
Yeah.
Excellent. Okay, we're rounding out. We've got 20 minutes left. I want to try and get through this. Do you know my friend David Sachs?
He's a friend of Bitwise. I don't know him personally, but he's a friend of
He's an
Bitwise.
ex-South African. We went to school together. Do you believe that the US's commitment to crypto is real? What is your answer to a sort of adversarial, conspiratorial person saying that Trump is in this for the money?
Well, I think the commitment to crypto is extraordinarily real. I mean, Sachs has been empowered and has done a huge number of things. We've made massive improvements on a regulatory side, massive improvements on the banking side, and the industry is growing as a result of that. And I think that commitment stems from a desire for America to win, desire to be the crypto center of the world, certainly from some political calculus. I don't think it's like idealistic purely, but I do think, that the Trump administration has a natural affinity for crypto that extends back to, being debanked and all of those things. That's not to say that there aren't concerns about enrichment and things that should be investigated. I think that's true across the political aisle, right? Nancy Pelosi is the most successful
100.
stock trader of all time. And I think that should be illegal, right? So I'm all for cracking down across all elements of politicians benefiting from their position. But it doesn't take away from the fact that what we're doing on a regulatory side is extraordinarily positive and good for crypto and good for the country.
Let's move on to Solana. What I'd like to know from you, and the audience would love to hear, from an institutional perspective, Has Solana narrative moved on from meme coins?
Yes, absolutely. Meme coins actually never come up, believe it or not. It's actually funny you asked that. I hadn't processed that in my head until you crystallized it. But I haven't heard meme coins in a institutional discussion of Solana in 9 months. So yes, I think we've moved on from that narrative. It's a challenger asset on stable coins and tokenization.
I always tell people now that meme coins were simply a liveness test. As a software engineer and architect, it's the absolute most perfect liveness test of all time, in my opinion.
100%.
It's something with no inherent value, create perceived value, test volume and scalability, fine tune your network, and basically create the plumbing on which now real tokens with actual boards and business models can take place. I mean, you couldn't do that liveness test with real stock.
I couldn't agree more. I actually sometimes tell people that we're fortunate that crypto developed on the timeline it did. Imagine if the world was tokenized and we were all using stable coins and blockchains performed like they did during the first NFT boom when a transaction could spike to $200. It would have been over. No one would have ever touched it again.
I mean, stable coins wouldn't even be a topic. If it's running on Bitcoin, they wouldn't even be
impossible.
I mean, these are such interesting topics. I wish we could do something on CNBC.
Right? Yeah. No, absolutely. But now we've had, as you said, a liveness test. Now we have penny, sub-penny transactions at scale, and we've proved it out. I think meme coins were an incredible gift in terms of fine-tuning that. And yeah, people have moved on. They know it's now up for bigger things, which is great.
Okay, moving on. I don't want to bring up the whole Ethereum versus Solana thing. I think it's boring. I'm going to pose the question in a different way. Do you think, like everything in engineering, we shouldn't have a single point of failure? So we need redundancy. So if we're tokenizing everything and we're depending on one chain, wouldn't that create a single point of failure? Wouldn't it be more important to create at least two versions of the token?
Yeah, I absolutely agree. Particularly
Ethereum and Solana are playing that role.
100%, 100%, and particularly at a relatively early stage in the technology. I think both steel sharpens steel, and you need that redundancy and fallback. I couldn't agree more. I think it's crazy to imagine any other outcome, to be honest.
Quick questions from the audience that I'm just going to ask you. Why did 2025 see historic ETF inflows but price declines? I want the Matt Hougan answer. Why did 2025 see historic ETF inflows but price declines? Go ahead.
Yeah, because existing holders sold. I hate to be a reductionist, a supply demand guy, but yeah, ETFs bought Bitcoin, ETH, Solana, and other assets. But existing holders, I think, sold to get ahead of the 4-year cycle. I think the story is actually that simple from my perspective.
Do you think that ETFs like yours and digital asset treasury companies, DATs, like DFDV, have created a new floor for Solana?
Yeah, absolutely. And they brought in a new kind of countercyclical buyer. And I think they'll dampen volatility over the time because these buyers operate on a different time scale and with a different cadence than previous investors. So yeah, it's created a floor and it will dampen volatility over time.
Excellent. When you talk to institutional clients now, what is their Solana, Bitcoin, Ethereum allocation versus a year ago? Is it changed?
In terms of the relative positioning between those three? Yeah.
Those three.
Yeah, it was Bitcoin only a year ago, basically.
This is from Matt Hougan. This is what I've been telling him. So a year ago, it was 100% Bitcoin.
That's correct. Yes.
And now what would you think it is?
Now maybe it's 70-30 or 60-40 between Bitcoin and other assets, getting down to 50-50. To put it in a different context, when we have conversations, we now have a store of value conversation and a stablecoin and tokenization conversation. We have two equal narratives, and that's what people want to hear. You know, I'm going to these major conferences to give keynote addresses. Last year it was about Bitcoin, so maybe the 100% was my fault. This year, it's about stablecoins and tokenization. That's where the narrative is shifting.
Your institutional clients and yourselves, where do you custody your Solana?
The B sole custody is at Coinbase Custody.
What is it like working with Coinbase Custody and Coinbase in general?
They are excellent at what they do from a technological perspective. They're very professional and good to work with, and they know it, and they are not the cheapest game in town. They come at it with true excellence on a technical side, and prices and orientation fits that. But they're actually exceptional professionals. It's a well-run business.
Okay. And then the second question, has Anchorage posed any competition to Coinbase yet?
Yeah, definitely. We work with Anchorage on our DeFi index fund and on some other initiatives. We love the team there. I think they're a rising competitor. They're now firmly in the conversation when you talk to clients about the leading custodians, and we love their technological implementation. So we're big fans of Anchorage too. We use multiple custodians across the suite of all of our products.
Are you able to name all of the custodians so people are aware?
We use Coinbase, we use Anchorage, we use Fidelity, we have SMAs with Gemini. In Europe, we use Zodia, which is a Standard Charters custodian. And I believe we have a relationship with BitGo as well.
What's your feeling on XRP? Why do you not have an XRP ETF? It's a question from somebody.
Oh, we do have an XRP ETF.
There's the answer.
There's the answer. We actually have a good ticker, which is XRP.
Okay. Have you ever met anyone with an XRP wallet?
I've met people who own XRP. I can give you my view on XRP if you want it. I think I rational view on XRP.
Sure, go ahead.
So the rational view on XRP is it faced a sword of Damocles regulatory threat for many years, and it was trying to be a business-to-business blockchain. And there's no hope it would succeed in that environment because who's going to work with it when the SEC is suing it? Now they won that lawsuit, so they're freed from that perspective. And the question is, can they develop real-world use cases? And I think the story of that is out. But I think you can't sort of blame them for having slow business-to-business adoption during the lawsuit phase because it was existential in nature. And I also wouldn't write off the possibility that they find product market fit in a major way in the future. But I also wouldn't avoid the reality that right now they're still looking for that phase. So I think that's the way to think of XRP, at least how I think of it.
Next question regarding Solana validators. When institutions talk to you about Solana, do they ever bring up the Solana goes down narrative?
It was funny, when you raised the meme coin narrative, I almost brought this up. No, not anymore. I always thought that narrative concerned crypto Twitter more than it did the institutional community. The institutional community is like, 40s and 50s, and they remember when the internet went down. Like they remember when Facebook used to go down all the time. And they're actually sort of legacy memories from early internet of downtime being the norm and those businesses today being worth a lot. And so I don't think the Solana going down narrative actually ever really dramatically impacted institutions the way we saw parts of crypto Twitter freak out. But even to the extent that it used to come up in conversations, it no longer does.
Okay. And with 10 minutes left, I just want to bounce into my own questions because I just saw your interview. So let's talk a little bit about the Clarity Act. I'd like to hear your opinion, firstly, on the Clarity Act, how you see a more common sense version of it, whether you think it's accurate, whether you've read the latest draft, whether your institutional clients are aware of it, care about it, and whether, just like everything, they pile too much into it, causing it to deadlock instead of leaving it in its pure form, which was to simply differentiate classification of crypto assets. Can you answer those questions?
Yes. Yeah. So to take the last question first, absolutely. It's frustrating that it became this omnibus bill covering everything from stablecoin interest to there was like credit card fees layered into it.
I cannot believe that's in there.
It's completely ridiculous. It'd be hard to imagine, except for that Congress always does the most complicated thing. I think what we needed was a very simple bill about clarifying what is a security and what is not a security and how they're regulated at a fundamental level. And then we could add more regulation as time went by. It's disappointing to me that it bloated in this way. My view of the debate around it is there's some non-negotiables that you need to have in any bill. The stuff around security status is actually good. It sort of aligns with the Judge Torres view of how to define what is a security and what is not a security. I think that stuff is great and should be non-negotiable. That was where the bill started. Basic DeFi protections of developers, developers can't have unlimited liability for the code that they write. That stuff has to be in there and has to be non-negotiable. But I think, m- y- beyond that, you get to like good enough and we'll fight the other fights later. And I do think, from my perspective, I would love to see a good enough bill pass that earns like the first 6 yards and shoots for a first down later on. It does come up in institutional conversations. They don't know the details. They mostly want to see it pass because they think it'll be a catalyst for future growth, which I agree with. And look, the poly market odds right now, I think, are 56% that it passes. I'm actually slightly more pessimistic than that. I think it's more like a coin flip, but I'm really hopeful that we get something because I do think it will provide a floor that will allow big investment from institutions that will at least have a common understanding of what the base layer of regulation is.
If you run a simple AI query right now and say, please classify major crypto network tokens based on the recent Clarity Act markup, it says that Bitcoin, Ethereum, Solana, XRP, Litecoin, Dogecoin, Hedera, and Chainlink are expected to classify as digital commodities. All the others will have to prove that they're not securities. What do you think will be the reaction if that is the outcome to other cryptos? What is a real world consequence of this ruling with regards to the projects?
Yeah, so my interpretation of what the Clarity Act says is actually much more expansive than what ChatGPT is giving you there. I think the core of the Clarity Act aligns with the idea that the initial issuance of a security of a crypto asset can be a security, but future subsequent scales won't qualify as a security. To zoom out, just for people who aren't close to why this matters, securities law in the U.S. is based on disclosure. The reason crypto always said a blockchain can't be a security is literally from an SEC perspective. You need to have somebody go in and sort of vouch for things about a blockchain. And, to take the most extreme example, who is that on Bitcoin? Who is going to register Bitcoin at the SEC? The very point of it is it's decentralized. And so you can't be a security and require that. I think the direction of travel that the Clarity Act is trying to get to is most crypto projects start as securities because it's a few people around a table coding and coming up with an idea. And for sure, they control the outcome of that. And if they sell tokens directly to someone, that is a security sale. And they should have to disclose things about insider ownership and what they plan to do with the project. But once it's reasonably decentralized and they no longer control the core keys, secondary cells of that asset that power that blockchain shouldn't be securities. And I think that's a reasonable interpretation. So actually, my view of what the Clarity Act is saying is currently it's relatively expansive. It includes those 10 assets, which all qualify under generic listing standards for ETFs, but it also includes a lot more assets in the secondary market. And it's a pretty good foundation for separating the two.
So, from my understanding, the current Clarity Act says if it's an existing ETF and has already passed through approval, it's immediately a commodity. If it's sufficiently decentralized or is traded on a regulated futures market like Coinbase, then it's a commodity. And just for the audience's sake, what does it actually mean if it's not a commodity and doesn't fall into that? What is the process? Would they have to then prove, or would it require legal fees? Is it a black mark? What is it, a death sentence?
It's a harsh sentence. It requires legal fees and it requires the blockchain to not be decentralized. It sort of requires someone to be in charge of it. You can't have a security that someone is not in charge of. And that's where you get the real challenge. I think the idea though again is you could start as a security and become a commodity through decentralization. If one of the core benefits of blockchains is that they're not controlled by any one party solely. You can't do that if you're a security. It's just sort of oil and water. And there are restrictions on how it trades, and there are restrictions on who can own it and how it can be owned. So it's a pretty bad mark if you're permanently a security. It's not that bad a mark if you're temporarily a security, but you're en route to being a commodity. I think all blockchains make that transition. And that's where the sufficiently decentralized question comes in. What
Brilliant.
does that term mean?
Okay, 4 minutes left. I'm just going to zoom in here quickly. I'm on bitwiseinvestments.com for the audience. Such a well laid out website, by the way. Really love it.
Thank you.
So you've got your Bitwise 10 crypto index ETF. How is that performing versus the individual asset ETFs?
Yeah, it's actually held up really well. So that's peculiar in that it was a GBTC style trust. And so typically when those convert, you see a lot of money flow out because there were people who bought it at a discount and were arbitraging the difference. Since it's converted to an ETF, the assets have been fully sticky. I think that's ultimately going to be a massive product. I think it'll be a $100 billion product eventually because I think it's a good solution for many investors. Not for everyone, but I think it's a good starting point.
And talk to us, what exactly, just quickly, what is the Crypto Industry Innovators ETF?
Sure. That holds publicly traded stocks that are pure plays in crypto, so that have 75% of their revenue from blockchain or crypto activities. So that's like Bitcoin miners, it's Coinbase, it's Circle. And then it has a small allocation to companies like Robinhood, which are bigger institutions, but it's sort of the infrastructure.
And then the Web3 ETF, what's the difference between that and sort of the 10 crypto ETF?
Yeah, the way to think of that is more companies that are using blockchain and crypto to be more efficient. So Figure is a good example of that, although that's in both. But you also have companies that are further down the chain of experimenting on blockchain.
You have Mike Cagney in both?
I believe we do. I believe we do.
He's such a goat to me.
He is. He is.
I mean, he has yields. It's an interest-bearing stablecoin, and he got it registered through the SEC.
Yeah, it's unbelievable.
Now they're fighting about it in the Senate. He's already got it.
I know. He's a legend. He had a post which I tweeted about today that I'll call out. He was writing about his core business, which is home equity loans, and he noted that it takes $13,000 to originate a loan with Fannie Mae, and on a blockchain it takes $1,000, which I think is just such a concrete example of the efficiency that we're going to gain. He's really at the forefront of real world use. He's a legend.
Matt, we've got 1 minute left, so I'm just going to end this. First of all, any questions? Raise your hands quickly for Matt.
Nah, we'll respect the time. What a legend. This is a good combo.
Yeah, Matt, we'll do another one. Obviously, I think we should do another one. I've got lots more to talk to you about, but this is a really nice and concise 1 hour we can share. Fantastic website. Everybody, go and look at Bitwise's website. Go shopping. This is the time. We're at the macro bottom. This is the time. Right now. Go shopping now. Bitwise has got the best catalog. Go and have a look. Go and buy some Bitwise ETFs. These things are magnificent. Mr. Hougan, thank you so much for your time. Some of the best answers to some of the most complex questions. I'll send you the recording. Come back anytime.
This was a lot of fun. The best questions and the best audience. Thanks, everyone.
Thanks so much for coming, Matt. That was Matt Hougan, CIO of Bitwise. Go check him out. Follow him. Adios, my friend. Okay, people.
Excellent, Tom.
Yeah, that was exactly 1 hour. Perfect. That is the end of Solana Breakout Day 1. Everybody that's listening, thank you for joining us today. That was amazing. We had Camino, Pragmatic, Soulflare.